Guys, has the time come to ditch the stock market? I've been investing for over a decade now in the stock market, but recently I've decided to liquidate almost all of my positions. So in this video, I'm going to run through exactly why I've made this decision, what my plan is moving forward, why I'm feeling less and less comfortable keeping my money in the stock market, and then finally we'll have a look at my overall portfolio performance and how this new strategy has affected my returns. Before we get into it, if you are new around here, my name's Alex and I'm a long-term investor with over a decade's worth of experience investing in the financial markets. But with that being said, I'm not a financial advisor and none of this should be considered financial advice. But with that being said, let's get into it. Now, I don't want to sound all doom and gloom, but the current global economic landscape is not looking good. Looking first just at the UK, we're officially in a recession, which means we've had 2 consecutive quarters of negative GDP growth. Inflation is currently sitting around double the Bank of England's target of 2%. The number of people defaulting on their mortgage payments is up around 7% due to higher interest rates. All major UK stock market indexes are either flat or have actually seen negative growth. Taxes are also at all-time highs and there have been a significant increase in hidden taxes for the consumer. The NHS is basically failing and it seems past the point of being salvageable. Government debt is also completely out of hand. And this is just a glimpse of what's going on in the UK, but the rest of the world is in a similar situation. The US, who are seen as the global economic leaders, have a lot of the same problems that we do. They have increased inflation and higher interest rates which don't actually keep up with the inflation rate, and with a government with completely out of control debt, which is now sitting at over $34 trillion. Well, despite all of this, the US stock market has remained remarkably strong. This is mainly thanks to the tech sector, which is being massively propped up by the Magnificent Seven, which is made up of Google, Apple, Microsoft, Nvidia, Amazon, Meta, and Tesla. So both the Nasdaq 100 and S&P 500 have broken all-time highs, despite the economic challenges that we're facing. Many people, including myself, believe that this sector has become a bubble, and it could be on the verge of bursting. Historically, when interest rates are higher, this tends to slow growth for businesses. This is because it's more expensive for them to borrow money, and therefore it's more risky to try and expand and grow the company. And usually when interest rates are higher, investors tend to move money away from these so-called risk assets, which can be volatile, into what are called safe assets, which are often fixed income where the returns are guaranteed. For example, with corporate and government bonds, which in simple terms is where you're lending money to the government and you're being paid back in interest for offering that service. When interest rates are higher, these safe assets are more appealing because you're getting guaranteed returns without having to risk as much. But when interest rates are lower, it's more difficult to get a decent return, so people are forced to go into riskier assets. Towards the end of 2023, we saw Warren Buffett buy $29 billion worth of government debt. And as he is one of the world's most renowned investors, it's probably a good indication that the stock market is overvalued. But we're currently not seeing many people follow in these footsteps, as the Nasdaq is up over 11% in just the first 2 months of 2024, and it seems that the tech sector is still the place to get the best returns, whilst the bond market seems to be struggling to capture this money. Now, up until recently, my investment portfolio has been made up of predominantly tech stocks and a range of slightly diversified investment trusts. And this has treated me fairly well over the last decade, but over the last 2 years I've been feeling less and less comfortable with this strategy, and my returns have suffered. I'm torn because I truly believe in the tech sector long term, but over a shorter period of time, I believe we're due a big correction, and I just don't want to be one of those people who's sitting complacently at the top, waiting for something to come along and knock it down. Considering this, you might be thinking, well, where have you moved your money then? Has it gone into government bonds? Simple answer, no. Call me a skeptic, but I don't believe that government debt is as safe as people like to think it is. The obscene amount of debt that these governments have does scare me, and I really wouldn't be surprised if this system started to collapse. Also, the returns you get from safe assets like government bonds just don't keep up with inflation, which means over time, rather than your money increasing in value, your buying power is actually being eroded. So for me, government debt is just not an option. Property is another consideration, but I already own my home and I don't really want the hassle of owning a second property because that'll bring a lot of extra admin when it comes to property taxes. I also don't want to be managing tenants, property maintenance, and hold a relatively illiquid asset. The housing market is also looking relatively uncertain. Due to higher interest rates, I really wouldn't be surprised if we saw a further decline in average house prices, especially if interest rates remain higher for longer. And to be perfectly honest, I don't really have the capital available to be buying a second property comfortably. As everyone knows, the housing market has a very high barrier to entry. Gold is also another option, which many people believe is a safe haven asset, but for me, I just believe there are better assets out there than gold. So with that in mind, the asset that I've decided to put the majority of my investment portfolio into is Bitcoin. I'm not going to go over it in too much detail, but here are some of the main reasons that I see value in Bitcoin. Firstly being is that it's a scarce asset, and there will only ever be 21 million in existence. It's also built on an extremely secure, decentralized network, which can't be manipulated by individual companies, but more importantly, can't be manipulated by governments. It's also currently the best performing asset in the world, so it has amazing return potential, and I believe it's still very early on in its life cycle. And I feel that as governments continue to rack up obscene amounts of debt, and then print money to cover that debt, and therefore debase the value of their currencies, more and more people are going to cotton on to the fact that these decisions are making everyday people like you and I poorer, and they're going to lose some faith in the system like I have. So for me, Bitcoin just ticks all of the boxes for what I'm looking for in an investment asset. It's the best store of value that protects you against inflation, it offers the best returns, it has a lot of potential and opportunity going forward, and it's also a hedge against the current system, which seems broken. So towards the end of the summer in 2023, I gradually began liquidating my investment portfolio and moving it into Bitcoin. This didn't happen overnight, but the more and more I learned about Bitcoin, the more and more comfortable I felt putting my money into this asset. So with that being said, let's get looking at my portfolio performance since I started investing and see how this decision has affected my portfolio returns. So this is my own custom investment tracking template, which is a free download on Google Sheets if you're interested. I'll leave a link to that down below in the description. But basically all you need to do to generate this performance chart is basically keep track of your portfolio balance at the end of every single calendar month, and just keep a note if you've added or withdrawn any money into your portfolio. And then it will take all of that information into account and generate you a performance chart against whatever indexes you want to track against. So for me, I compare my portfolio against the FTSE 100, the FTSE 350, the S&P 500 and the Nasdaq 100. So you can see the Nasdaq in orange, S&P in green, FTSE 350 in yellow, FTSE 100 in red, and then my performance is in blue. And so this chart dates back to May 2013 when I first started investing. So over the years, my performance has been pretty steady, and I've had similar returns to the S&P 500. But in 2021, my portfolio took a bit of a dive and I made a few mistakes. And at one point I was down almost 30% from when I originally started investing 10 years ago. So I realised that something had to change. Throughout 2023, I spent a lot of time learning about Bitcoin. And like I said, throughout the summer, I slowly started to move more of my money into Bitcoin. And obviously there are fees and charges for doing so, which is why the portfolio took a bit of an extra dip at around August and September. So from that point where I was sitting at 29% down and I was being beaten by every single index out there, I'm now beating all of the indexes that I'm tracking against, and I'm 114% up in just a few months. Now I can't lie, I'm incredibly pleased with how my portfolio's recovered. In such a short space of time, this strategy has done exactly what I needed it to do and more. Most people that I talk to think I'm absolutely mad for implementing this sort of strategy, going pretty much all in on one asset, as it goes against pretty much every bit of investment advice you see out there, where people talk about how important it is to diversify and spread your risk across different asset classes. But to me, it honestly doesn't feel crazy at all, and it seems like the only logical decision with all of the stuff I've learned. The way I look at it is, why would I dilute my returns by diversifying into other assets that I don't believe in the same way? To me, this isn't a YOLO investment where I'm just putting money into something random hoping that it's going to go up. It's a highly calculated risk. And I truly believe if you want to better your life from investing, you do have to take these calculated risks. And you can't just follow the average strategy that most people go on about. I've spent months and months and months learning about Bitcoin, and the more I learn, the more conviction I have, and I really believe it is the future. It's actually quite liberating having just this one primary focus, compared to if I was investing in individual companies where I'd have to keep up with all of those individual companies, exactly what's going on, who's managing them, what's happening internally, and trying to keep up with all of that information as well as the wider economic situation. With Bitcoin, all I need to do is learn more and more about the asset itself, how the boom and bust cycles work with Bitcoin, as it typically trades on a 4-year cycle with huge growth followed by a sharp decline in price, and just gain a good understanding of macroeconomics, which is the study of large-scale economic factors and how they interact with each other. So for example, understanding what happens if interest rates go up and how that might affect different asset classes. With that being said though, there are obviously huge risks with a strategy like this, and I really wouldn't recommend it to anyone to simply copy what I'm doing. Obviously it's going well for me at the moment, but it could quite as easily come crashing down in just a few weeks. But my view is if you want to be a successful investor, you need to do your own research, find something that you feel this level of conviction with. And if you really want to make a decent return, you're going to have to take an element of risk. You might come to different conclusions than I have, but the fact is there are loads of different asset classes out there that you can make decent returns in. For example, property can be a profitable venture for some people, but for me, it's just not something that I'm that interested in. Now, with all of that in mind, at the time of recording this video, Bitcoin has just broken all-time highs against the euro, and it's on track to break all-time highs compared to any other traditional government currency. Personally, I think this is just the start for Bitcoin's price discovery, and if everything plays out as expected, I expect to see huge price discovery in 2024, and I also wouldn't be surprised if we see a huge decline in price once this happens and people start to take some profits. So personally, I am going to be taking some profit to pay off some liabilities that I have, for example, debt that I have on my house, and I will also be taking some profit to invest back in myself to try and excel my businesses. But long term, I don't plan on selling much because I truly believe it's the best store of value and it's an appreciating asset. And so I'm going to try and hold on to it for as long as possible and just keep trying to buy more whilst being aware of the 4-year cycles. But there we have it. That basically covers everything for today, guys. If you did make it this far, thank you so much for watching. And if you did enjoy the video in any way or found it useful, please do me a huge favour and drop a like on the video. Also, let me know your thoughts down below in the comments. Do you think I'm completely mad for going for a strategy like this? Or do you think there's some value in what I'm saying? Either way, I'd love to know, so let me know your thoughts down below. Also, if you do like content on personal finance, investing, and chasing that dream of financial freedom, then this really is the place to be. So make sure you hit that subscribe button down below and click that bell so you never miss a video. If you do want to learn more about Bitcoin, I will leave a link on screen now to my video where I break down all of the basics. So if you're completely new to the asset and you want to just learn a bit more about it, it's a perfect video to get you started. But with all that being said, take it easy and enjoy the rest of your day.